To use another term, it's a seller's market still. Buyers are focused on acquiring stable, profitable, and growing companies within almost all industries. And within that, we are seeing, whether it's a strategic buyer or a financial sponsor buyer, a heightened focus on companies that are incorporating technology-enabled services or value-added services into their offering, with the end goal of providing, those companies are providing solutions to their client. Whether it's a good market or a bad market, good, stable, profitable, growing companies will always attract a lot of buyer options and can, in the right competitive process, obtain a premium valuation. And so, in short, what I would say is where we sit today, I am bullish on the M&A market today, but I'm closely monitoring what happens here in the back half of the year. What are the multiples trading at? And I can and often do give a lot of thoughts and advice on that topic. But at the end of the day, there's only one way any company is going to be able to determine its value, and that's going through some kind of competitive process where you're pushing the buyers in a disciplined competitive process to pay the best valuation. And in that, that's how you find what the maximum value is and don't run the risk of leaving money on the table. And then finally, let me just hit a couple of high notes here about the distribution M&A market, which again, we've been active in the space for over 30 years. It is distribution is certainly a very broad market. It's a very attractive market. It's a fragmented market. There are a lot of strategic buyers and a lot of financial sponsors who are very active in the space. What I would say is we don't see that abating anytime soon. We feel like there's going to continue to be a lot of buyer and capital partner options for owners in this sector. What we do see is that the companies that tend to trade in the higher valuation ranges are offering those value-added solutions that have the sticky client bases and that are building value with solutions for their clients. So many different ways to add value-added solutions. But I can tell you, if you show me a set of financials of a more commodity-oriented company and one that's more value-added, solutions-oriented, I can tell pretty quickly which is which. Because there is a huge differentiation factor, usually on the profit and loss statement. Think about the fundamentals of stability, profitability, growth, and then scale. And then finally, as I mentioned earlier, you're focused on your building value now, but when the day comes that you want to exit, think about competition in a competitive sale process ultimately maximizes value and fit.